that's actually kind of cool that we can actually mimic what we have in the real world into the Web3. And
Let me see if I got it correct. Say I have a Bitcoin and I want to get a loan against it. I come to your app, and you guys give me a certain percentage of its worth right now, right?
a lot of speculation markets, and then very similar to the early days in the 80s, where a lot of people are trading on blue chips, and then a lot of other investors are trading on the pink slips or penny stocks. And
And how do you guys go about security? Because hey Brian, welcome to the podcast. It's really nice to have you here.
thank you, George. It's nice to be here.
And before we dive into the subject, can you please give us a brief introduction on yourself? Who are you, and what have you been doing before crypto? How did you get into our industry as well?
Sure, of course. I'm Brian. I'm one of the co-founders of Zklend. Zklend, it's a lending money market protocol, a lending borrowing protocol on Startnet. We started, I would say, start building in February 2022. So it's about a year and a half in building right now. Before my crypto life, I have been working in the finance field for about 13 years. I started in Bloomberg and then did that for a very short time before moving on to a global bank doing investment banking. Did that for about 7 years. I cover um, real estate sector, so I do a lot of bonds, a lot of IPOs and merger and acquisitions. And after that, moved on to doing private equity, which is going outbound for doing investments acquisition as well. Did that for about another 5 years or so, and then got a little bit bored from basically all the transaction executions. At the same time, I was quite intrigued in the whole crypto scene and start to see a lot of momentum from institutions looking into the crypto field as well. And I took the hint as with the traditional finance background and my interest in the crypto field, decided to start something of my own, and then met up with Jane and also Jonathan, the other co-founders, and also our tech lead, Jonathan. We decided to build a DeFi protocol on a layer two roll up, and that's pretty much the beginning of Zklend.
And how did you, first of all, when did you started getting interested in crypto?
Yeah, I would say I was only looking into doing a little speculation. It's just buying a lot of
Yeah.
altcoins, buying a lot of shit coins on the side, and then it's just really exciting at the time because the market pumps, and then overnight you see a lot of green bars, and then it's just a lot of adrenaline, and over time start to want to get a lot more into the DeFi side, not just on buying coins, and starting to use some of the DeFi protocol and thought to myself, actually, these are actually have a lot of similarities and a lot of primitive use case of what I see in the TradFi market, and thought that that's actually kind of cool that we can actually mimic what we have in the real world into the Web3. And at the time, I thought instead of just doing speculation, I think I actually do want to get involved more, not just on using a DeFi protocol, but actually I may be able to contribute myself to the ecosystem by building something on some DeFi protocol that would have more actual life, real life use cases. And I think that was kind of the aim of me going in. And yeah, I was quite lucky to be able to connect with a few other enthusiasts that actually want to start a project at the time, and yeah, I think it was more getting more and more dug into the rabbit hole, and finally one day just decided that I want to get myself in the driver's seat instead of just kind of a passenger seat.
And so first of all, your background is really interesting. And what strikes me is that your background in traditional finance, and you're currently building an app in in DeFi, which is also kind of finance oriented, right? So would you care to explain what are the biggest similarities and then the biggest differences between what you do now in DeFi with what you did back then in TradFi?
Sure. I think there are a lot of similarities. So, for example, a lot of what we see that are being built right now in the DeFi sense or DeFi 2.0 right now would be some of the basic building blocks in TradFi rails. For example, you will have the leverage market, the credit market. You don't yet, we don't, I mean, we don't have a lot of or actual equity markets, but vis-a-vis, we have the token exchange market, which is kind of similar. And then you would also have, for example, the futures market or perpetual market as well. And I think the behavior and the actions of a lot of speculators are very similar to, for example, in TradFi sense, it's just a lot of speculation markets, and then very similar to the early days in the 80s, where a lot of people are trading on blue chips, and then a lot of other investors are trading on the pink slips or penny stocks, and that's pretty much where you have the diversity between like all the, let's say, the BTC and the ETH being the blue chips, and then you would have all the altcoins that are they would have a concept, and then they would have lower valuation, but they would have a much higher volatility, and that's very similar to a concept company that started in, let's say, the 80s, 90s, and then they would trade on a penny on a dollar, but have a huge speculation angle to it. So I think in that sense, it's kind of restarting the whole financial cycle in that sense. And then I think for us, we are kind of following the cycle and then building the credit side of things, where we actually want to do both the short-term money market, but also try to extend ourselves into a little more forward-looking, where we will be able to start to have fixed rates, and then being able to kind of recreate the fixed rate markets, the whole credit market trading on Web3, where we would eventually be able to have more longevity in terms of how money are being looked at, the value of time value of money on Web3. I think that's on the similarity side, but difference is it's, I think a very much at the same token is very different in the sense that there is no long-term rate. For example, everyone is very short term, and I would say the whole Web3 or DeFi industry is more or less like a derivative of the TradFi markets, where it's not exactly entangled, but you can see it almost as an extension of a commodities trading products that are being set up on a Web3 rail. And then in that sense, basically the value of money is not equal, except for example, let's say some of the stable coins, for example, USDC, USDT might be similar, but on other sense, tokens, whether those are have true values or those have intrinsic values, I think that's quite debatable in some cases. So in that sense, I think a lot of what people believe in the value system is quite different from a traditional sense. I think that's kind of a long-winded answer for it.
And let's jump into what you're currently doing at Zklend. So first, can you please explain what your app is focused on and what you guys do?
Sure. So Zklend is a money lending protocol, or a money market protocol built natively on StartNet. We have two solutions underneath the Zklend brand. One is a permissionless over collateralized lending platform for DeFi users. And essentially what it is, it's where users will be able to connect to the app through Origins or Bravo's wallet on StartNet, and they will be able to deposit their assets and using that to enable as collateral and to be able to borrow against that. And then that one is already live since May, the mainnet alpha version. Another side of things, which is the permissionless compliant focused lending platform. And that one, it's catered for institutions and business clients alike. The reason I mention it's institution and business, because this product, we actually want to combine the KYC component, where users going in and out, they would have to go through a KYC, and also for borrowers, they would have to go through a due diligence process, so that we understand exactly the people going in and the money going into the pool are clean. They will have gone through the AML and CFT checks, and with that, we will be able to offer under collateralized loan in both floating rates and fixed rates. And then for the Zklend institutional side, we also want to leverage on both ERC tokens and also RWA tokens. So then we will be able to open up the avenue where we will be able to take in more collaterals for borrowing.
So what kind of assets are currently supported on the live version of that?
Sure. We currently support 5 assets: ETH, BTC, DAI, USDC, and USDT. And these are basically the 5 assets being supported on Startnet at the moment as well. And we are currently going to expand to a 6 assets, which is Mapstake ETH. This one should be coming live in the coming months or so. And we think that, the liquidity, the LSD narrative will be very strong on Startnet once it's go live. And we feel that there is a lot of utility we can unlock when we have Mapstake ETH being a liquidity pool on Startnet.
And do you lend? So let me see if I got it correct. Say I have a Bitcoin and I want to get a loan against it. I come to your app and you guys give me a certain percentage of its worth right now, right?
Correct. And that would be the collateralization ratio you're referring to. So what we have is we will have collateralization ratio and also a borrowing factor as well. What that means is collateralization ratio is very easy to understand. So let's say you have one BTC and we think that BTC is a very high quality assets. So we're able to let you, let's say, borrow 80% or 70% or 80% of the value of the BTC. So you're able to borrow, let's say, assuming the price right now is $26,000, you'll be able to borrow 70% of it. So around, let's say, $20,000. At the borrowing factor side, what that means is we want to identify assets that actually moves up and down together, or assets that move inversely together, because assets that moves inversely together will have a higher risk factor for the users. Because let's say if the loan value increase, your collateral decrease, your account factor actually decrease much faster. So that is why the borrowing factor would be lower than 1 for these type of assets when they are inversely correlated.
And what kind of assets can I get for my BTC, for example?
You'll be able to borrow, for example, the or out of 4 assets basically. There will be assets later on that would only be able to, let's say, deposit, and then you won't be able to borrow against that, or some asset that you will be able to deposit, you will be able to lend to other people, but you won't be able to use that as you will be able to use that as collateral, but on the other side they won't be able to borrow it. So you will have three type of these assets, and they will be in different isolated pools depending on basically the liquidity available on the market that determines whether they can be borrowed, and also how fluctuating it is, so then whether they can be able to use as collateral itself.
Is the whole thing decentralized, or is there a centralized component in somewhere there?
Yep, I think right now there is a centralized component, to be very honest, and it would be in the parameter setting side, because right now the interest rate and also, for example, the collateralization ratio and borrowing factors, these are all parameters that are set by the team internally. Ultimately, we do want to let these factors become decentralized and the users be able to control it. But and on the get-go, it doesn't make sense to because they are critical factors that determines the operation of and the safety of the protocol. We have to ensure the safety of the funds. So right now it's quite centralized. Down the road, we might have a separate committees that have the experience to deal with these kind of parameter changes. For example, they might contribute from consultancy from Quantlin or some other financial analysis protocol, and the result of which would be basically being brought forward to have a vote, and that component will be decentralized.
And in terms of when I lock my collateral and I get the borrowed amount, is this part completely decentralized? So for example, so I lock them in a smart contract, which is defined by certain parameters. And once the conditions are met, the actions are taken. I assume that's...
Exactly. So that is totally permissionless. So what it means is you are the only one that would determine whether you want to connect to the protocol or not. You have total autonomy. You have total control in how much or how little you want to deposit, and all the actions in terms of whether you will get liquidated, the interest, and also how you want to manage your loan positions, use your collateral, enable and disable. These are all done permissionlessly. So all these are decentralized in that sense.
And how do you guys go about security? Because like I'm in media and I think that every week there is a story about some
Yeah,
protocol getting hacked. So what do you do for security? Because I feel that's
sure.
like one of the most critical components of a lending business.
Absolutely, absolutely. Because I think lending protocol are one of the strongest targets for hacks because I mean lending protocol and bridges are two that actually holds a lot of value in the smart contract. So I think it's a
Right.
natural place for hacks to happen. So for us, we do have I would say um, three lines of defense. The first line of defense would be in a design protocol, we would set parameters so that, for example, we don't allow certain assets to get borrowed too much. For example, these collateralization ratios, borrowing factors, to ensure that the protocol will have buffers, and even under edge cases, they would operate as effective and efficient as possible. That's one. And then two, it's we actually do code auditing twice. So for I would say we did it twice, but using three auditing firm. So the first one would be when we did the Caro Zero contract, we have it audited by Nethermind and ABDK. And then we also had another Caro One audit as well just recently. So the audit actually helps to improve basically the security of the smart contract to make sure that the invariance of the code doesn't break, and then also there wouldn't be any security loopholes that would be able to exploit. And then the third line of defense would be basically in terms of Oracle. So for price Oracle would be one main vulnerability for lending protocol. Currently, we use Pragma Network on StartNet. They provide pricing for us. They are decentralized and they have pricing from both AMMs, DEX, and also centralized exchanges, and also market maker as well. So their pricing is relatively robust. And on the same side, we also have our own secondary internal price guidance so that if, for example, the pricing deviates from our own bandwidth by a certain percentage, then we will basically pause it and say the pricing is a faulty one. Um, Actually, one last thing that we recently entered into for about a couple months already is that we are working with Hibernative, and they are a risk monitoring protocol. So they would do real-time risk monitoring of the entire network, both on Ethereum and on Startnet. And what they do is they basically use machine learning languages to pick up any abnormality in terms of the user behavior, or if, for example, they start to see accumulations of capital in certain wallets that interact with us, they would notice these type of patterns and potentially could be amping up for an attack, and then they would be able to inform us so that we will be able to take preemptive actions to basically pause the smart contract, or if needed to basically bar certain address from interacting with the protocol. So I think we do have quite a good defense in terms of design, in terms of doing audits, the pre-deployment and also post-deployment. We will have the Hibernative working for us on a real life monitoring.
Okay. And why did you guys decide to build on StartNet?
Sure. The reason we want to build on StartNet is we set our sights very early on that we have strong conviction on CK rollup. CK rollup is zero knowledge rollup. It's basically they use cryptographic proof and CK proof technology to provide a very high advantages in terms of scalability, where transactions are very cheap and then they will be very fast as well by basically batching transactions, multiple transactions into one single proof. And we see that Ethereum is somewhere we want to build on top because it has the most ideal setting where the decentralization component and the security component is second to none. And we do understand that scalability is something that Ethereum does not have, and the layer two ZK rollup basically solves that. So of the ZK rollup at the time we started, there are only, I would say, two that are quite prominent. StartNet being one of them, another one is ZK Sync. And basically at the time we decided that StartNet would be the one that we want to start with because they have a very strong track record with the prior product StartX, and that gives a lot of confidence in us. And I think the ecosystem right now is growing fantastically, and we have been able to contribute to the ecosystem and being a great part of it since the very beginning. And yeah, overall, I think right now it's looking back, it's a great decision that we decided to be on StartNet.
Yeah, there surely is a lot of buzz around zero knowledge technology proofs and rollups, and we see them popping up more and more. Can you perhaps give us some sort of an idea what kind of, for an application for ZK technology within the lending field, what would that be?
Sure. I think for us, even though we have the name Zklend, I would say we don't actually embed the ZK proof technology in our protocol as a whole, but we actually use ZK proof or ZK rollup technology as a platform. So just to wind back a little bit, so StartNet itself, it's a composable layer two that allows a lot of different protocols to build on top. And the great thing about it is there are no fracturation of capital when you are building on this layer two. All the protocols will be able to interact with each other. So basically, the five currencies that we have right now, these would be able to support it by all the other AMMs, all the perps, and everyone. So then we don't have a fracturation of liquidity, and basically all the assets that are being bridged over to StartNet will be able to tap into it. And I would say some of the key applications for us would be basically fast transaction speeds, and also the transaction cost itself. It's going to be much lower than how it is on layer one. And other component that it's not being talked too much about at the moment, or we don't see too much of a live application just yet, but StartNet actually enables native account abstractions. And what that means is all the wallets on StartNet are basically smart contract compared to on layer one Ethereum, it's EOA. What that does is two things. One is that it would start to enable a lot of cool features, programmability in the wallet itself, and that it's going to be a fantastic features for us to unlock. Even actually, we do have that feature on a protocol already, where we would be able to deposit and enable it as collateral in one single go. And imagine later on you would be able to use the account abstraction to set automated payments or automated repayments, so that you will be able to pay down your loans over a period of time, or being able to draw a certain amount of loans if, for example, the interest rate is below 5%, let's say. Then you will be able to set these type of conditions and being able to do automated payments. And this is something that we think it's going to be unlocking a lot of actual use cases for lending protocol per se.
And so have you, first, account abstraction, that's a fascinating concept to me. We've had a conversation with StartNet on our podcast before, probably half a year ago, and they were dwelling in account abstraction and explaining all the cool features that could bring to DeFi. My question to you is, do you have some sort of an observation? What are people doing with the money that they lend from your platform? So are they using it to simply amplify their exposure, or to perhaps, invest in something different, or to trade, or?
Yeah. I think there are two key usages we see right now. One of them is they do borrow from Zklend, and then they basically put it onto LP pools on AMMs, because right now there is quite a bit of disparity in terms of availability of capital between, for example, DAI versus ETH, or BTC versus USDC. So sometimes these pools actually have high interest rate in the range of high double digits or even three digits. So what we see is that we have a lot of borrowing happening when these type of LP pool have high interest rate, and then they would take advantage of our protocol and being able to get liquidity this way. Another one is because a lot of, I would say, early users, they bridge their ETH onto Startnet and they don't have a lot of usage for it, so they deposit into our protocol, and that makes our ETH lending pool very, very rich. And so the interest rate is relatively low compared to other layer ones or other rollups. So we actually do see that some people actually borrow from our protocol and then using that and bridging it over to other roll-ups or other layers to get the arbitrage from it. So I think these are some of the early primitive or early use cases we see, but obviously there will be more as we see more, for example, DEXs or perpetual exchanges coming up on Startnet.
And it would have to be the Starknet wrapped version of that asset, right? So for example, the ETH supported on Starknet, the BTC supported on Starknet, and so forth.
Yep, I think currently the ETH being supported on Startnet, they are using a canonical bridge, basically Stargate. So the ETH version, while it exists on Startnet as let's say the Startnet ETH, it's still the same ERC 20 tokens that are being used on layer one. So in that sense, they are composable.
Right. Correct me if I'm wrong, but you guys are also on the verge of issuing your very own token.
Yep, correct.
And do you have it planned in the roadmap? When can we expect it?
Yeah, actually, it's no secret. Since I would say our very beginning when we start building, the token plan has always been visible, and then it's targeted, I would say, some within this year. So I would say for us, it's a pretty good chance that we'll be looking at Q4 of this year. I would say middle part to later part of this Q4. And the reason we want to launch our tokens, I would say right now, even though Starnet it's still at a very relatively early stage and not a lot of protocols on it just yet, we do see that the token itself actually provides a few good usage for the protocol and would be able to help us get the flywheel going for the protocol, the Lightning protocol itself. And specifically, what I mean by that is because ultimately we will want to establish a safety module so that we enable staking of our tokens to create a buffer so that for a lending protocol, when we have momentary market fluctuation or an unexpected acute withdrawal pressure, we'll be able to use that safety module to help basically bridge it so then we don't have a situation where we run into bank runs. That's one. I think it's for the safety, the stability and safety of the protocol itself. And another two benefits would be basically to incentivize borrowing and lending, because right now the rates are being determined by the interest rate curve we set, and then also based on market supply and demand. But if, for example, we want to incentivize people to, let's say, borrow more ETH and then doing a bridge over to other platform, we can actually create incentive by giving out distribution rewards in form of our tokens when they borrow certain assets. And in that sense, we would route the demand that we want into certain pools and be able to increase the utilization that way. And I think for the last component, which is going to be further down the road, is for governance. I think we ultimately want to set up a active committee where token holders would participate in the voting of, for example, bring on new assets onto the protocol, labeling whether they should be high risk, low risk, setting up parameters and things like that. I think these would be decisions that we want to ultimately start to decentralize. And to have the tokens would be kind of the first step in order to have a base of committed users and invested users that would actually be able to help bring the protocol forward in this vision.
Are you, because one of the main drawbacks of having a token is its value, right? So it could be, you know, a blessing and a curse, but my question is, if you are you not worried that, for example, if the your native token's value goes down, that would also reflect on the entire protocol's reputation, so to speak?
I would separate those two quite distinctly because I think you're right. I think the token has a aspect of reputation or aspect of value imply on the protocol itself, but I don't think they are equal. They're not equal sign or they're not directly correlated. In a sense, what I mean by that is I think the protocol would be able to operate just as fine without the token as is. I think the token is trying to establish two things. One is the stability of the operation, and the other one is the governance. The incentive part, of course, yes, I think we want to use tokens to attract users, but if we strip away the tokens, I think the protocol is still working fine as is. We just use a little bit of marketing juice on the side, maybe. So I do understand that given the market's situations and how early we are in the ecosystem, there could be a bit of down pressure in terms of the token price when we go live. But I think ultimately when it might be momentarily, I hope it will be momentarily as well. But as the ecosystem start to build and you see StartNet start to vibe, and then they would have their own governance tokens, start tokens as well, and more tokens being brought on, and we would be able to support them on Zklend. We would start to accrue value for the protocol itself. And I think the token would reflect that when we start to have the operations running assets. So I would hope the operation would be reflective on the token itself, but I wouldn't think of it the other way around. But obviously, you're right. There could be a little bit of detrimenting effect where it would make the news saying it drops 50% on day one, let's say, then people would say, oh, what is happening with Zklend? Are they not doing a good job in terms of doing lending and borrowing?
Yeah, I don't want to imply that the token's valuation will be correlated with the protocol's quality, but it's just that from my experience and from what I've seen in the market, most people do, right? They would associate
Yeah,
the price of an asset with the quality behind it. And in this case, the
for sure.
product behind it is Zcash. Yeah.
Yep, yep.
You mentioned earlier in our conversation that you kind of saw DeFi rebuilding cycles in TradFi. So how far do you think we are in those cycles?
Oh, I have tried to answer this question, but I have not been successful in being accurate. I think um, in general, in my very limited time in crypto, I have experienced, I would say, two full cycles in terms of how the market goes from where when I joined in early 2022 and then gone through the Luna crisis and then the FTX crisis. And then right now, there are a lot of hacks going on for DeFi protocols that's not putting a lot of confidence in users. And also, I think on the same side, the macroeconomic is not doing well as well with all the rising interest rates. So then lending protocol, it's actually not doing so well in a sense comparing to the TriFi sense where people, I mean, to get attractive rate, you will be able to get very attractive rate off chain as well. Um, but as a whole, I think DeFi, the market moves quite quickly. And when you have a narrative building and it becomes a strong momentum going forward, I think the market can move can reverse in matter of months. So I don't want to say when the market will trough, when the market will pick up, but I do see that there are quite a few narratives that is building at the moment. One of which is, let's say, layer two. I think layer two, it's going to be a game changer for the whole Ethereum on the blockchain space. And I do see that with so many different teams starting to build different layer twos, it becomes it's not if, but it's just a matter of when this narrative will become dominant, and you would start to see protocol and capital reside on layer two, and layer one would just be a consensus layer more or less. And when that comes, you would start to, I mean, I would hope that would lead to more massive adoption because it's just so much easier compared to other centralized alternative. And when that comes, I think that would be a beginning of another bull market or another uprise in narrative. So with that, I would say it still requires a little bit of time, even for Starnet that we're building on. There are still a lot of hiccups in between and a lot of instability in the network just yet. But I would be confident that within the next half a year or year, these would get more or less ironed out, and we start to see more people start building on it. And that's when I would say the next bull cycle would be kind of the catalyst for the next bull cycle.
This next thing that I want to talk about might sound like a promotion, but I promise our audience it's not. It's just that most of the DeFi field is centered around lending, and it's a question that impacts pretty much every single decentralized lending protocol. Earlier, you mentioned most of the use cases for the people who lend money and what they do with it. So what are the other use cases? Because it sounds really, really niche, right? So it's just financial players using capital to squeeze certain edges off of different parts of the market. This is not something that the regular user would do, right? And a lot of people are saying that, mass adoption comes with regular people. So how can a regular person use your product, and by extension, all other lending protocols to do
Right.
regular stuff? What are these regular stuff?
I agree. I agree. I think one thing that needs to be established before you would start to see mass market using Lightning Protocol is certainty of fundings, certainty of exchange rate or interest rates, and certainty of fund securities. Um, right now, I think the first two would be relatively easier to crack. And what we are doing with the institutional product is so that we are able to set up a fixed rate reference. And once we have that, we will be able to create credit derivatives or interest rate swap where we will be able to match our floating and fixed, and we will be able to basically offer floating fixed rate to even for our DeFi users as well. And not just that, I think there are a few other teams that are doing working on the credit derivative angle as well. So I do think that this piece is going to get cracked soon. And once you have a certainty of term and certainty of interest rate, that would give it a lot more applicable use cases, because no one wants to borrow 5% right now, and then knowing that tomorrow it could be 20 or 80%. And in terms of the safety of funds, I think right now DeFi protocol is still heavily relying on over collateralized lending, because that's the thing about the decentralized or permissionless lending. It's so that we don't KYC, we don't take any of your personal information, and basically there's no recourse. So that's why I have to have certain assets being pledged in order to borrow against that. I think that will not change very, very rapidly. There are other protocols and other service provider that does the KYC or due diligence, or basically doing background checks. For example, like Fedora doing credit scoring and so forth. But ultimately, I think these are still risks that you wouldn't be able to underwrite for the borrower. So what I do see might happen is instead of, for example, let's say you use 100 USD to borrow 80 equivalent US dollars. What about if, for example, you use illiquid assets off chain and being able to tokenize these assets and use that as a collateral? Or even, for example, you would be able to use a treasury bond where you're actually earning interest off chain, and then you will be able to use that as collateral. And I think once you have that, then you will be able to still using a collateralized function, but being able to unlock capital efficiency through basically combinations of real life assets and also on-chain tokens. And with that, I think the imagination starts to grow, and then one day you will be able to use bonds, the other day maybe you can start to use commodities contract, you will be able to use future contracts as a collateral, or maybe you'll be able to use um, trade finance, factoring, or invoice slip as a collateral as well. So I think these are all primitives that might exist down the road. And I think that would be one thing that could actually unlock a lot of capital efficiency and then ultimately actual use cases and mass market adoptions to the lending space.
It's interesting. Last week, I've had a conversation with the CEO of the EOS Network Foundation, Yves Larose, and he mentioned that one of the main topics of Token 2049 in Singapore was tokenized assets, and mostly everyone was talking about tokenized assets, which is. And what about institutions? Do you see them? So I have this. This is a twofold question. First, are they interested? And second, are they interested in decentralized products, or do they just want security? Because given the current state of things, decentralization and security, it's not really going hand in hand with all the incidents that we're seeing. Yeah,
you're absolutely right. In my honest, humble opinion, I think RWA definitely took the center stage of Token 2049. And I would say a lot of the focus is actually focusing on how do they provide distribution of tokenized assets on Web3. It's not so much using it as a collateral per se, or using it to unlock other capital efficiency on changes yet. So this narrative works because, for example, when you have treasury bonds that are or treasury that yields 4 or 5% naturally, and then you will be able to generate 4 or 5% yield. And then if you're able to find a distribution channel on chain, you will be able to issue a coin against that that's generating 4 to 5%, and then that's basically as good as stake ETH. But you don't have the technical or security concern behind Ethereum or anything like that. That's really sweet for a lot of institutional investors, and it's like a exposure in Web3 without getting exposure in Web3 in that sense. But what if, for example, let's say by end of next year, or let's say third quarter of next year, when you start to have interest rates starting to decline, these narratives start to become unattractive really quickly. And I think with that, you would start to actually see, for example, where tokenized asset will not just be a distribution channel, but can actually be tokenizing assets outside of just treasury. Could be, like I said, a loan syndication contract, or a supply contract that would yield a certain amount of payables, and then using that basically what becomes, by let's say 1 year, you would have all the receivables from the supplier, and then you would be able to tokenize that and being able to use that for, let's say, for an income, or basically use that as collateral. And for the second part of your question, it's if institutions are susceptible to the decentralized component of it. I think right now it's still too early. I think some hedge funds and some forerunners are actually experimenting with it. And actually, one very positive move is where Chainlink is actually working with Swift, using the CCIP to create a network where you will see banks using Swift to enter into the decentralized network. I think this idea is quite genius. The reason being, we have always thought of decentralized blockchain as a replacement or being able to bridge directly to institutions. But you have to take into account the institutions actually, they have worked for the past 50, 60, 70 years, and they have established their own payment system, their own chains, and their own rails for payments already. To have them basically deprecate that and using another sets of newly developed blockchains or public blockchain, it's very scary, and it's not going to be happening very soon or at all. So being able to bridge between, for example, Swift and using CCIP to connect to Ethereum, I think that's going to be a very possible solution, and one that I could see taking place relatively soon for some selected banks. So I think when you start to, for example, for CCIP to start come online with Swift, and some of the participating banks start to allow their clients to, let's say, have some of the tokenized assets being bridged using CCIP onto the DeFi decentralized network. And I think in that case, then I think a lot of protocols would, for example, DeFi protocols may be benefit from these type of assets coming through this way, but I wouldn't imagine, for example, Zklend to be a counterparty to a traditional bank, for example.
Brian, what are you most excited about for our industry in the next couple of years, and then for
Yeah.
Zklend in the next months, let's say?
Sure. Yeah, I think for the first part, I am going to repeat my answer. I think
Yeah.
layer two, it's definitely, yeah, the emergence of layer two, it's definitely going to be very exciting for the next, I would say, for the next 3 to 5 years, definitely. I think it's going to be much quicker than that, but in order for the whole narrative to play out, I think 3 to 5 years wouldn't be too long of a time. I assume that there will be a lot of innovations being built on top, and then we will start to see the full blown impact by that time. I think specifically for Zkland, we are quite focused and quite excited that we want to crack the liquidity fluctuation issues. I think what we want to do with the institutional part is so that we are able to, an institution and DeFi part is to combine both pool of capital and being able to basically dot it out or erase the line between retail capital and institutional capital per se. But I think going forward, taking a larger grander scheme of things, the liquidity fluctuations between different chains and between different roll-up right now, it's still being unsolved. So I think for us, an omni-chain or omni roll-up narrative is something that we actually do want to invest and want to spend our time looking into. And what that means is instead of having multiple deployment and using bridges to assets over, but ultimately you would have multiple instances of the Zkland protocol across different chains. We want to create that's actually using the layer 2 or layer 3 or even app chain technology, where we will build Zkland on an app chain, and we will have different touch points being deployed on different chains. And so that that becomes kind of like a portal that consolidate all the assets into the blockchain, into the app chain. And so that we will be able to resolve the liquidity fluctuation issue. And not only that, but being able to ultimately create an experience where users don't have to worry about which chain they're on. They will have to worry about the bridging. They can just reside on the chain, use it, their wallet of their choice. They can be on Solana, they can be on Ethereum, and they will still be able to access Zkland as is without having to, let's say, bridge over to Ethereum and then bridge over to Starnet in order to use Zkland. So I think this is the vision that we see our protocol going down the road. And yeah, this would be the thing that most excited us and keeping us motivated to build through the bear and hoping to come out on the other side.
Yeah. Well, thank you so much for this. I think it just about sums it up, everything that we wanted to discuss. Can you tell our audience where they can find you?
Sure. You can look us up on our landing page. It's zklend.com, and our app is already live. It's app.zklend. We are also very active on Twitter or X, and then and also on our Telegram as well. Our Discord is always open, and we have a very active community, and our mods are very experienced in answer any questions you have in terms of user experience, the user experience, if you have any issues and whatnot. And I would urge you to do follow us on X, because we do have a lot of new campaigns coming up, and because right now we're focusing on our mainnet launch and also the new assets launch coming up. So we will have, I would say we will have a lot of different campaigns, different exciting marketing pushes coming on. So it's not too late to follow us and to get a little bit of that action.
Thank you so much, man, and have a good one.
Thank you so much, George.